I tracked top 10 off-plan in Dubai, and the results shocked me. Dubai's off-plan market just hit $90 billion in the first half of 2025, and it's the biggest in its history. And here's the truth most people miss. While ready properties have already appreciated and often trade at peak pricing, off-plan projects still sell at lower entry points, with built-in upside, flexible payment plans that let you capture tomorrow's value today. That's why I've been obsessively tracking the top 10 off-plan projects across Dubai, and what I've uncovered about pricing, timelines, and actually ROI might completely change the way you think about investing here. I'm Daniela. I've been living and working in Dubai for over 11 years, guiding serious international and local investors from the UK, Germany, India, the US, across Europe. These aren't casual buyers. They're entrepreneurs, they're fund managers, families deploying anywhere from 2 million to 15 million dirhams into off-plan projects. Over the years, I've helped many clients achieve at least 7% net rental yields and as much as 35% ROI during construction. In this video, I'm sharing exactly what the numbers say about Dubai's off-plan market in 2025. No hype, just data and strategy. Dubai's off-plan sales now make up nearly 70% of all property transactions. The reason is simple. Off-plan pricing starts below ready market levels, where ready units in Dubai Hills or downtown are already commanding 2,500 to 4,000 dirhams per square foot. Their off-plan counterparts in early phases often start at 15 to 20% lower. As construction progresses and the handover approaches, prices rise to meet the ready market, delivering the capital appreciation that simply isn't available with a fully priced ready unit. This is how early investors in communities like Dubai Creek Harbor, Dubai South, or Dubai Islands to Business Bay have already locked in 20 to 35% appreciation during construction. They didn't wait for the glossy brochure launch. They moved in the early phase before the hype and before the Instagram ads and bought wholesale while everyone else was waiting for retail. Payment plans are what make off-plan both accessible and powerful. While ready properties demand full cash or a mortgage immediately, off-plan typically asks for only 10 to 20% upfront and spreads the rest over the construction period, sometimes even after handover. You're not tying up your full capital today, you're leveraging time, letting Dubai's growth do the heavy lifting. Your ROI calculation should always include the entry price, the construction timeline, and how the payment plan aligns with your cash flow. This is why my clients treat payment plans as a strategy rather than a perk. It's not about making an affordable property look affordable. It's about controlling a future asset at today's cost while your capital works elsewhere. Of course, none of this works if you're not careful about who you're buying from. The broker commissions on off-plan can actually be almost sometimes double or triple what they are on ready properties, which can tempt some agents to push whatever pays them the most rather than what serves you best. That's why we dig into developer delivering history, the real price per square foot, and projected rents before committing to a unit. Done right, off-plan isn't a gamble, it's a structured way to buy tomorrow's property at today's price. Let's talk about resale and liquidity, because this is where people misunderstand off-plan. Yes, off-plan comes with holding periods and SPA restrictions, but if you're entering early at the right price, you don't need to rush a resale. You let the project mature and you exit at a premium. Take Dubai Creek Harbor or the Oasis by Emaar. Early investors saw more than 25% appreciation before handover, and many now have built-in equity well before paying the full balance. Compare that to buying a ready unit at full price. The upside is already baked in, and your only growth is slow appreciation or rental yields. The key to liquidity in off-plan is timing. Getting in at the early phases give you built-in upside even with SPA limitations. Buy late phase at peak pricing and you will struggle to resell. Hidden costs matter too, but here's the difference. Because your entry price is lower with off-plan, those same costs eat up a smaller share of your total investment. The Dubai Land Department fee, the 4%, is unavoidable, but service charges apartments in Dubai can run 14 to 40 dirhams per square foot, depending on the community. Management handover fees add up as well. But when your entry price is below ready levels, your percentage yield remains strong. That's why mid-market off-plan projects often deliver strong cash-on-cash returns than ready properties. A Creek Harbor off-plan unit can project 7 to 8% gross yield. An Emaar Beachfront off-plan unit can project 5 to 8%. Lower entry price plus strong tenant demand equals higher yield percentages. The biggest mistake I see investors make is treating off-plan like a quick flip at any price. The win isn't in the hype, it's in the early phases, the credible developers, and the right pricing. Serious investors look at developer history and delivering record, phase pricing versus ready comparables, payment plan versus projected rents, and resale restrictions written into the SPA. This disciplined approach is why some investors walk away with 25 to 35% appreciation during construction, while others break even. From tracking the top 10 off-plan launches, 3 standouts keep coming up. The Oasis by Emaar with ultra-luxury master planning and 20 to 30% projected growth. Dubai Creek Harbor, early phases where investors have already seen more than 25% appreciation. And projects like Burj Bingati Jacob & Co., a branded hyper tower with 20 to 30% post-handover potential. The common thread in all of these projects is insider access. Developers run a 30 to 45 window before the public launch. Prices in that window are 15 to 25% lower than the launch day. That's where my clients enter. This isn't about bragging rights, it's about protecting capital and locking in appreciation before the rest of the market even knows. That's where I'll pause and I'll invite you, if you want a personalized strategy, to pick the right off-plan project. From identifying the project, to catching the pre-launch window, to structuring your ROI, book a call with me. The link is in the description. I'll walk you through the same steps my private clients use to beat the market. This is about protecting your capital and making it work harder, not chasing hype. So here's the bottom line. Off-plan in 2025 is still cheaper than ready. You're buying before appreciation. Payment plans create leverage and flexibility that ready properties can't. Mid-market off-plan projects deliver better yield percentages than ready properties. Early phase with a credible developer and insider access creates real ROI. Dubai still offers massive potential, but only if you approach it strategically with data and discipline. Don't buy hype, don't buy Instagram dreams, buy value, timing, and location. That's how serious investors convert off-plan opportunities into real profit. If this video helped you, hit like, subscribe, and share it with someone considering Dubai's off-plan in 2025. Drop a comment below. Are you already in off-plan or are still? I'd love to hear your strategy. See you in the next one.